Well, good evening, everyone. My name is Robin Morris. I'm the convener for the Oxford Energy Network. And following on from the stimulating talk last time from Matthew Trewella at Kenza Engineering, who updated us on ground loop heat pumps and the trials in Energy Superhub Oxford, this evening we have great pleasure in welcoming Gillian Cooper, Head of Energy Policy at Citizens Advice. Gillian leads the organisation's work in the statutory role they have as an energy consumer advocate, and in its market meltdown report, Citizens Advice outlined how regulators really have failed to take meaningful action against unfit and unsustainable energy suppliers. Not trying to prejudice what you're going to say, Gillian, there, but those failures really are going to cost billions, and it all has to come out in the wash somehow. So it's no small ask in the face of the widely trailed jump in energy prices. Gillian is going to be looking at market failures, the challenges of how we support households, and how policy, in amongst all of that, supports the transition to net zero. So Gillian has long experience in the retail energy space, also including senior roles at Consumer Futures, and has a master's in research in public policy and public engagement. We're not sure whether to believe the rumours that Ofgem brought forward their announcement about changes to the price cap to make it easier for Gillian to join us this evening, but we are grateful that she's come along. And Gillian, we look forward to your talk. Thank you very much.
Thank you for that introduction. So this is a topic that feels very topical today. I don't know if anyone managed to watch Ofgem's appearance in front of the Bay Select Committee earlier today, but our market meltdown report was in the papers again today, just ahead of Ofgem's appearance. So as Robin said, I've got 17 years of experience, I think it is now, at a variety of different consumer watchdogs. And at Citizens Advice, I wear two different hats. So I lead the advocacy team, and then I'm also responsible for the energy advice market strategy. So that's sort of thinking about our energy advice services. So that's just to say that I've got many years of working on all the issues that I'm going to cover in my presentation tonight. And just to save you guessing, I'm from Canada originally. I often get asked this afterwards where I'm from, but I've lived in the UK for a very long time. So my presentation, sorry, I just need to figure out how to move forward on Teams because I'm not used to Teams. Okay. So my presentation is going to cover a unique period in the energy sector. I'm going to start with a bit of background on the role of consumer advocacy in energy. As some of you might be wondering why a national advice provider does so much work on energy policy. The main focus of the presentation will be to outline the key reasons why a gas price crisis caused so many supplier failures, which was outlined in our recent market meltdown report. I'll also talk through our initial reaction to the government's response to the energy market crisis as it attempts to tackle the impact on people's wider cost of living. And finally, I'll end with some thoughts on where do we go next and how do we build a more resilient, sustainable and net zero compatible retail market. So first, I think it'd be useful to outline why we're involved in this, because not everyone is aware of Citizens Advice's role in the energy sector, despite our very best efforts. You probably know Citizens Advice as an over an 80-year-old charity. We're the nation's largest advice provider, with roots in the vast majority of communities across England and Wales. And each year we help millions of people find a way forward across all markets, whatever their problem. So we have been the statutory advice and advocate in the energy sector since 2014. There have been independent consumer advocates within the UK for many, many years. An organisation called the Gas Consumers Council was around for decades prior to the establishment of Energy Watch back in 2000. So when Energy Watch was established, it had the job of representing gas and electricity customers and provided advice, specialist complaint handling services and advocacy on behalf of consumers. And as an organisation, it had a number of campaigning successes, but it was felt to be under-delivering and new arrangements were proposed. So I joined Energy Watch in 2005, right before it got slated for abolition. But because it was an organisation set up by primary legislation, this took quite a long time to complete. It was eventually abolished in 2008, and its powers and duties were transferred to an organisation known as Consumer Focus. And it survived for a number of years and was formed through the merger of the consumer bodies that the then Department for Trade and Industry, now known as BEIS, was responsible for. So that included the National Consumer Council, Postwatch, and Energy Watch. When the idea was first proposed, the assumption was that the other consumer advocacy bodies in water and transport would follow and be merged into Consumer Focus, but that never actually happened. So Consumer Focus as an organization had a number of successes, not least when it managed to compel a company called npower to return £70 million to customers that it had overcharged. But it didn't survive the bonfire of the Quangos, and its powers and duties were transferred to the Citizens Advice Service in 2014. So by 2014, Citizens Advice Services' role in the energy sector included providing first-tier advice, operating a specialist complaint handling unit that dealt with cases from consumers at risk of disconnection or in vulnerable circumstances. It's known as the Extra Help Unit. And then obviously the consumer advocacy role. And as someone who's worked in the sort of three different models that have existed since 2000, the transfer to Citizens Advice, although it was quite controversial at the time, has been successful. The statutory advocacy work is grounded in an organisation that's able to draw upon much wider insight into people's current experiences of a range of different markets and government services. This does strengthen our work, and I think it really sets us apart from the other single issue consumer bodies. Similarly, having statutory responsibilities has strengthened Citizens Advice's policy work. And as an organisation, it's much more effective as a campaigning organisation and advocate than it was prior to 2014. So it's within the sort of energy team at Citizens Advice, our vision is a GB energy market that treats everyone fairly now and into the future. So just looking back at that sort of list of the history of consumer advocacy, you might wonder if Citizens Advice should be worried about its role, given that the trend has been to set up a new body every few years. But as of right now, it's not something we're overly concerned about. We're actually due to expand our duties in the energy sector and have been nominated as the new advocate for consumers living on heat networks. And that role is expected to become official after the passing of the next energy bill. So again, as someone who's worked in consumer advocacy since 2005, it has always been a very highly political sector. There have been numerous market probes, market resets, market inquiries, and interventions by Ofgem and other competition authorities over the years. There were periods, you can see from this chart, where the next investigation started as soon as the previous one had finished, and when the conclusions had failed to satisfy anyone. I think this is a topic for another session, but a lot of this is down to the uneasiness over the role of competition within an essential for life market and the ability of competition to deliver good consumer outcomes for all. There are long-standing historical concerns about the market share that was held by the so-called the Big Six, as was. This meant that it was felt that there was a stable oligopoly as opposed to the fierce competitive pressure needed to drive down bills and improve efficiencies within individual companies and deliver the good consumer outcomes. In particular, the concern was whether competition was driving down prices for all, including the significant number of consumers who were not engaged. And by that, it was sort of defined as those who were not switching around, shopping around, moving to cheaper tariffs. There was also concern about whether or not there was sufficient competition in the different market segments. For example, there has generally been quite strong competition for customers who pay their bills by direct debit. There's a lot of choice, a lot of options traditionally on offer for those customers, with the exception of now. We are in a very unique period right now. But in contrast, the state of competition for customers using prepayment meters has traditionally been quite weak over the past decade, with much more limited savings available to those looking to shop around. And the CMA inquiry, which took place between 2014 to 2016, confirmed the long-standing view of consumer advocates that people on lower incomes, people with a disability, people from Black and minority ethnic groups, people who are digitally disengaged, people living in the private rented sector, all of these sort of consumer segments were less likely to be shopping around and more likely to be paying higher default tariff rates. So with the conclusion of the CMA market inquiry, the prepayment meter price cap was introduced to address the weak competition in that market. But there were rising concerns that this did not tackle the wider problems with the loyalty penalty, whereby sort of people who don't shop around pay higher prices. So that led the government to introduce a whole market price cap, with Ofgem implementing it from January 2019. And at that time, there were around 11 million customers on the price cap. It was designed to ensure that people who didn't shop around didn't pay over the odds for an essential for life service. And it started to do the job of improving efficiencies at energy suppliers. But then the 2021 gas market crisis came along. So when you look at all the sort of various probes, reviews, investigations, and inquiries on this slide, you can see why Ofgem as the regulator was keen to be doing what it could to encourage new entrants into the market in order to put pressure on the incumbents. So this slide is from our market meltdown report and outlines the rise and now the fall of suppliers active in the GB energy market. Carrying the slide forward to 2022 would show a continued fall in supplier numbers, as there's been 29 suppliers exit the market between the start of 2021 and as of today. And in talking through this slide, I wanted to provide a perspective of what it was like to deal with a big flux of new entrants to the market in the first half of the decade. So I worked at Consumer Focused at the time, and we had a specialist unit called the Extra Help Unit, which provides support to people at risk of disconnection or if they're vulnerable in some way. And in setting out my example of what it was like to deal with some of the new entrants that came into the market at the time, I want to draw a distinction with the earlier phase of new entrants to the market. So in that sense, I'm talking about companies like Utility Warehouse, OVO, First Utility, which is now known as Shell, and Utilita. So prior to launching into the market, these companies made a point of introducing themselves to us, explaining their business models, and ensuring that we had appropriate contacts in place and regular engagement in case we experienced any problems. And there wasn't a formal requirement to notify us at the time. These companies did so because they were planning to be in the market for the long haul. They were led by experienced directors who understood that they were seeking to operate in a highly regulated sector. But then we started finding out about other new entrants, generally after they'd kind of gone live in the market and started taking on new customers. And sometimes the first we'd hear of a new supplier was when our Extra Help Unit received an off-supply case of a customer. And that's a case where a customer paying by prepayment doesn't have access to heat or power because something has gone wrong with the meter. It might be that their top-up card isn't working or they can't afford to top up their meter. And people in that situation are sitting in the dark and the cold. And we were starting to receive off-supply cases from companies we'd never heard of. So the Extra Help Unit's advisors had to figure out how to contact the company and get the client's emergency resolved. And my policy team had to help them with that task, as well as checking with Ofgem and others to see if they'd heard of this company. Sometimes we found out about new companies from our regular data analysis, which found company names that we'd never heard of popping up. So we became regular users of systems like Companies House and other industry-specific systems, trying to track down the names of contacts of these companies. Frustrated staff at other suppliers were often a useful source of information, as they often struggled to get problems resolved as these new suppliers didn't have a good grip of industry processes. So As a process, we thought it could be improved, given the very clear risk to customers. And we actually spent quite a few years trying to get Ofgem to put in place a process whereby companies were formally required to contact us and establish a relationship before they officially launched themselves into the market. And that process was far more difficult than it should have been. And our experience with one particular supplier who has now failed summed up why we think this was so crucial. So this was a supplier, when we first heard of them, was via the off-supply cases that came into the extra help unit. And it wasn't just a handful of off-supply cases, there were many. And even after we established a relationship with this supplier, we remained incredibly concerned about the level of knowledge, their level of knowledge of the sector, the rules that they were required to follow, and quite frankly, their cavalier attitude to supporting their customers in distress. This particular company was growing its business using doorstep and field sales, and it focused on the prepayment meter market. On the positive side, it was offering slightly cheaper prices in a market segment that has historically and continues to suffer from weaker competition. But it wasn't following the rules, and we were getting frequent reports of sales activities that made very clear that they were breaching rules. They were signing people up at car boot sales, and many people contacted us because suddenly their old top-up card for their prepayment meter had stopped working. And when we checked the industry systems, we were having to tell these customers that they'd actually switched to another supplier, but they weren't aware of this, and they hadn't received any documentation from the company. Other people had their switch go through, but they weren't sent details of their contract or a new key to charge their meter, and they didn't know how to contact the company in an emergency. And for anyone on prepay, being without heat or power can be dangerous, particularly if the household has any medical vulnerabilities, if there's young children in the house. So quite frankly, in our view, this was a company that wasn't ready to run its own energy supply business, and its customers were paying the price. It was so bad at times that we were sort of convinced that this company was actually going to accidentally kill someone through their negligence. We had to threaten to go public with our concerns to get the company to agree to pause sales until it had carried out a compliance review and strengthen its internal processes and control. Unfortunately, it didn't work in terms of delivering a sort of sustained change in the way they operated, and this company was the subject of multiple Ofgem investigations until its eventual failure. And just from our perspective, there really wasn't a time when we weren't sending over regular case data to the Ofgem enforcement team. And again, would highlight this company's client base were more vulnerable than average because of its activities in the prepay market and because of the marketing channels that it used. These were customers that deserved fantastic service, but far too many of them didn't receive it. And for me, that particular experience summed up the reasons why we had a real issue with Ofgem's approach to supplier licensing and thought that they were getting the balance wrong. Running an energy supply company providing essential for life service is a privilege, it's not a right, and there should be much more stringent checks on new entrants to ensure that they're up to the job. And, yes, this company's entry into the market meant that there was more competition in the prepay market segment, but it came at a very heavy cost for the customers caught up in this mess. So this slide again is from our market meltdown report, and the example I just gave was one company, but there have been many more failures, 29 since the start of 2021. And the market meltdown report includes some examples of the companies that failed in the autumn. And again, it outlines the steps that we had taken over the years to raise concerns about their activities, and in some cases, their very rapid growth. In my earlier slide about the constant political headache that is the sort of retail energy market, you can probably understand why Ofgem might have struggled to find the bandwidth to tackle the problem that was building up in the retail market. If it wasn't actively investigating the state of competition in the market, it was in the process of implementing a series of remedies to tackle what the last inquiry had recommended. On top of that, thanks to earlier work by Citizens Advice, it was trying to drive through significant changes to the price control process for network companies, ensuring that they delivered much better value for consumers. And of course, there were issues like Brexit, which they needed to grapple with, and then the pandemic. So, we very much recognize that this was an organization dealing with an incredibly busy agenda and having to juggle many competing priorities. But this slide also outlines the impact on consumers of Ofgem's failure to sufficiently prioritize strengthening requirements on new entrants and their ability to take action against existing suppliers who were behaving recklessly. There's about 4 million people so far have been affected by supplier failures, and we're dealing with estimated costs of around 2.6 billion for the companies that went through the supplier of last resort process, because the companies that took on the customers of the failed suppliers can claim back many of the costs involved. The failure of Bulb last autumn has estimated costs of 1.7 billion initially, but that's likely to rise and perhaps significantly, depending on how long it takes to sell Bulb. And I don't know how many people on this call have been through a supplier failure, but the process can be quite unsettling. Because of the complexity of the processes involved, people with credit on their accounts with their old supplier may need to wait weeks or even months for that money to be refunded. If you're in debt to your old supplier, you may struggle to set up a new repayment arrangement with a new supplier because of the involvement of an administrator in the mix. And your tariff would have gone up. A lot of suppliers that failed were offering what were often unsustainably cheap deals because they weren't hedging their costs either at all or not effectively enough. So when the wholesale market turned against them last year, they had no financial resilience to be able to ride it out, and they failed. And that's not to say that all the companies that failed in the market meltdown this autumn were badly run. Some of them were doing interesting things, providing good customer service, and it was simply terrible timing. The gas price crisis has put extreme pressure on even the best capitalized companies in this market. And some of that is down to the mismatch between what suppliers could charge under the price cap and the prices they were having to pay in the wholesale market whenever customers rolled off fixed term tariffs and if they took on customers of failed suppliers. And while Ofgem has no control over international fossil fuel markets, it is responsible for deciding who is allowed to sell gas and electricity to customers, for regulating the companies active within the energy market, and it designed and implemented the price cap. And again, the price cap was never designed to deal with a situation of this nature. It was designed to tackle the loyalty penalty, not to become the cheapest tariff in the market. As of right now, there are over 22 million households on the price cap, and that figure is continuing to rise. So what we went through in the autumn really was a perfect storm and contributed to the size of the market meltdown we've seen in the past months. So this slide outlines how this was a problem that was building up over time, showing some of the decisions taken at various points over the last decade or so that also contributed to the eventual meltdown. So the standard business model for a new entrant to the supply market is to offer cheap fixed tariffs in order to attract customers via switching sites. Some suppliers relied primarily on other sales channels such as doorstep sales, but the vast majority of new entrants were targeting engaged households actively shopping around on price comparison sites. New entrants were able to offer these cheaper prices because they were exempted from some of the policy costs that larger suppliers had to charge. This was a deliberate policy designed to give new entrants a competitive advantage. And as an idea, it made sense on many levels because these companies would struggle to build market share in a market dominated by incumbents. Some of these new entrants were more cynical than others. I've certainly spoken to various companies over the years that implied or stated directly that they aim to draw in customers via cheap tariffs and then hope that they would eventually roll over onto a more expensive default tariff. And that's certainly not a new strategy in the energy market. It's one of the key drivers why there were just so many investigations into weak competitive pressures in the market over the year. But as a sort of business model, it's not a very sustainable one. Even before the price cap came along, most of the new entrants weren't making any money. The idea of profitability was always around the corner when they had even more customers on their books. Another trend that we saw in the market was suppliers using customers' credit balances to fuel their growth. Their business models wouldn't have qualified them for standard loans or investments, and they simply borrowed money from their customers to chase further growth. The administrator's report into Avro Energy, which failed in the autumn with 600,000 customers, said that it had no external funding and was financed through working capital generated by its trading operations. So that was a situation that never should have been allowed to happen. And I have to say, it was something that was long suspected by people in the industry that this was the case with that particular company. We also flagged in our report that the regulation of auto switching services should be looked at. When the meltdown happened, it was clear that some failed suppliers were gaining huge volumes of customers via auto switching services. So that's companies like Look After My Bills. God, my mind's gone blank on some of the names of the other ones. But there's sort of there's a couple of players in that market. And our consumer helpline dealt with a large number of calls from people who were mid-switch from one failed supplier to another supplier that had just failed. And that was all being handled by auto switching services. These services are unregulated at the moment, and we think there needs to be much more transparency about the decisions they make on behalf of customers. We've got quite a good report on this issue called Stuck in the Middle, which outlines our views on how to regulate the third-party intermediary market. So again, as I said, that there were kind of fundamental problems that some of these failed suppliers didn't come as a surprise to people working in the industry. It was kind of an open secret that there were a number of companies active who weren't properly fit to trade. And I personally, as well as members of my team, have had a huge number of, quite frankly, jaw-dropping conversations with suppliers over the years. This was information we continually fed back to Ofgem in the hopes that they would take action to crack down on these companies. And so you can see from the little timeline on the slide that Ofgem did take action over the years, but we don't think this happened fast enough. Another challenge that we had to deal with was the snarl up in legislative changes as a result of Brexit. Because until recently, one of the biggest socialised costs that people have had to pay for is the renewables obligation. Suppliers must make payments once a year, and it's not unknown for a supplier to use the money it's required to set aside for the renewables obligation to pay for other costs. Then when they fail, their share of the renewables obligation must be socialised and gets paid for by the rest of us. This was a known problem for a number of years, but it requires primary legislation to increase the frequency of renewables obligation payments, and the Brexit logjam meant that this just didn't happen. So 173 million pounds worth of renewable obligations payments were mutualised between 2018 to 2020 as a result through a series of supplier failures, and a further 218 million pounds will be mutualised in 2022. We're all going to pay those costs through our bills. So while Ofgem did take action to strengthen the arrangements for new entrants, putting things into effect in 2019, there were already far too many companies with shaky foundations in the market at that time. So the new arrangements they put in place in 2019 were having appropriate resources to enter the market. They must understand their regulatory obligations and have appropriate plans in place to meet them. And these companies needed to be run by people that were fit and proper, taking account of factors like links to companies that had previously failed or had had enforcement action taken against them. And it was worth saying that, what they put in place was an improvement, but we did want these requirements to be more stringent in places and slightly more akin to the FCA model and tests required in the financial services sector. Again, this action was slower than it could have been or should have been by Ofgem, and by the time the new rules to prevent unsustainable new entrants from getting a supply license were put in place in June 2019, the seeds of the meltdown were already firmly in place. 16 suppliers failed between 2018 and 2019, costing customers an estimated £255 million. And there were already far too many suppliers with unsustainable business models in the market by that point. And then it wasn't until the start of 2021 that Ofgem was able to bring in new requirements for suppliers already active in the market. This included the requirements to be financially responsible and have operational capacity to effectively serve customers. It also gave Ofgem new powers to conduct assessments to check that suppliers are adequately resourced as they grow, and powers to require independent audits of a supplier's service or financial health. There was also a new requirement to be cooperative with Ofgem and ensure that senior staff are fit and proper on an ongoing basis. And proposals to tackle the sort of known problem of suppliers using customer credit balances to fund their growth haven't been implemented yet. There wasn't supplier consensus about what was the best approach, but we are hoping to see movement on this year. So in our view, the action Ofgem took was too little too late. So if you watched the select committee this morning, Ofgem said that it recognised in hindsight that it should have acted much sooner. So I think, this is, we've called for an independent review into the sort of Ofgem's performance over the years. I think the main reason being is there was a sort of cultural issue at Ofgem, which meant that they didn't sort of prioritize this in the way that they should, even though sort of you could see the problems building up over time. Ofgem have recognized that. The chief executive, Jonathan Bearley, said that they've kind of looked back at how Ofgem prioritized at the time, and they decided to prioritize increasing the goal of increasing competition into the market, rather than sort of assessing whether or not the new suppliers coming in were properly fit to trade. We also think that Ofgem should consider introducing a new consumer duty similar to what's being introduced in the financial services sector by the FCA, which would put the onus on companies to ensure good customer outcomes in future. So there is already a duty called treating customers fairly, and this would be a step beyond, which again, I think takes us into something that is more fit for purpose in a net zero world, where there's a lot more complex choices that consumers need to make. And I think this would put sort of more of a balance on companies in order to sort of support customers with that. And again, part of this challenge is that this is all going to cost a lot of money to sort out. So we do think that, some of the costs caused as a result of the supplier failures shouldn't be passed through consumer bills. The cost of dealing with bulbs failure is a case in point. We think that should be dealt with via taxpayer funding rather than having it socialized through bills. So this slide takes us to where we are now, because the other huge challenge that we're now dealing with the gas price crisis, the market meltdown, and the continuing concerns about the resilience of energy suppliers this has all become a really key driver in the current cost of living crisis for households. We published new analysis last week, which showed just how many households were already struggling to afford the essentials, even before they're faced with an average £693 price rise from the 1st of April. For those households that pay by prepayment meters, that's about sort of 16% of the population. The rise from the 1st of April will be slightly more, at around £708. And it's worth pointing out that these households will feel the pain immediately the first time they top up after the 1st of April. Those who pay by direct debit will be able to sort of smooth out some of the impacts a bit easier. So this chart shows the huge increase in clients coming to us for crisis support. It's actually far higher now than it ever was during the pandemic. And that is before the real price shocks come in April. And I expect the lines on those graphs to keep going up and up. So there's a number of reasons why this crisis is going to hit people so hard. The gas price crisis means that there aren't cheaper deals on offer in the market. So one of the key messages we normally give people, customers, which is shopping around to save money, it isn't doable at this point in time because there just aren't the deals on the market. That might change later this year. But it won't necessarily mean that the cheaper deals will be on offer to the worst affected households, as they don't tend to be seen as the most attractive customers. And we also know that there are far too many households who simply have no give in their budgets. These households were already underwater before any of these rises kick in. And, you know, we're now facing an unprecedented energy price rise from the 1st of April. And unfortunately, it looks like there will be another one from the 1st of October as well. So in terms of solutions, we propose getting an emergency support grant out to about 9 million households on benefits and pension credit. A similar amount of money could have provided a bit of a larger rebate to the people who really, really need it. We thought it should then be followed up by a significant expansion of the existing warm home discount scheme. So it provided support in October to the same group of people. Under current government plans, the warm home discount will reach about 3 million households. We think it needs to reach many, many more. We've also called for uprating benefits to match the current rate of inflation, not the inflation rate last September. And we wanted the costs of supplier failures to be spread over a longer period. So what the government announced last week, which was the £150 rebate for households in council tax bands A to D, and the £200 loan from October, which again, is when we expect bills to rise even further to an estimated possibly £2,500, feels inadequate for the scale of the challenge that households are facing. And I think the sort of biggest concern we have is in sort of attempting to spread the sort of support on offer as widely as possible. It doesn't offer sufficient support to the households who are going to struggle the most. We do feel that the better and more sensible approach for getting support out to people would have been to use the benefit system. So I guess, you know, in terms of where we are, we don't think last week's announcement will address this challenge, and the government is going to have to do more to help low-income households deal with this crisis. And at Citizens Advice, we're going to have the real-time data showing the impact on people as the cost of living crisis continues to bite. So where do we go from here? And how do we build a more resilient net zero retail market so we don't face this problem in 2023 and 2024, and we can actually start making the sort of structural changes that are needed in order to sort of get the population on board with this sort of net zero transition that needs to happen. So I've already talked through what we want to see on Ofgem reforms and price support for customers. This slide kind of covers how we get the retail market in shape for the coming decades. So BEIS published its retail market objectives in the white paper at the start of 2021. We largely agreed with them that the retail market should sustainably deliver services that make it easy for customers to engage and adapt their usage to achieve net zero, and that customers should pay fair prices for their energy no matter how they engage. And it's really important to recognize and plan for the fact that while some households will be moving on to smart tariffs and buying new products and services such as electric vehicles that will lead them to use electricity in a much more flexible way, many households will not be making these changes in the 2020s because of their finances, their personal circumstances, or their housing tenure. So the traditional concerns about the role of competition in an essential for life market and whether it produces good outcomes for all are not going to be going away. If the policy and regulatory changes are done badly, these concerns could get even worse, which would place a severe strain on the country's ability to meet its net zero ambitions. The government has already signalled that it's planning to revise its future retail market strategy after the market meltdown. And we think there's a couple of areas that they need to focus on, namely engagement, innovation, and specialization. So on engagement, we don't yet know what people's reaction will be to the market meltdown. Many households, if they have a particularly bad experience or they've been spooked by what's happened, may be reluctant to switch again or trust a new entrant. Historically, larger suppliers have done a poor job of engaging their own customers, and as we head to a more consolidated market, the risks of significant loyalty penalties emerging may rise again. The price cap is now performing a very different role to what was originally intended, as the vast majority of households are currently on it. It provides price relief to many, but it doesn't address the problem of providing support to the minority of households who need much more significant price support. Ofgem and the government need to develop a clear plan for reopening the current market and longer-term measures to support engagement. So some of the changes that we're looking for include things like better regulation of third-party intermediaries like switching sites, auto switchers, as well as new models that might emerge into the future that help people use electricity in a more flexible way. And if we've got a consistent group of people who can't or won't engage because of their personal circumstances, then we need appropriate measures to support these households so they don't lose out in the future. The second area of focus is innovation. Innovation in the retail market to date has been an overused term in my view. I think large volume of new entrants doesn't equal innovation. Our experience of the market over the last decade has certainly taught us that lesson. So I mentioned the consumer duty before. We do think that a new consumer duty, similar to what the FCA is proposing to introduce, could be useful in delivering positive outcomes for consumers. So the FCA is looking for the businesses it regulates to deliver 4 key outcomes. The price of products and services represent fair value for consumers. Products and services are specifically designed to meet the needs of consumers. Customer service meets the needs of consumers, enabling to realize the benefits of products and services. And communications equip consumers to make effective, timely, and informed decisions. So if something similar was implemented in the energy market, this would make energy suppliers more responsible for ensuring that their customers got good outcomes. In terms of other approaches to facilitate innovation, so we'd also support the development of trials via Ofgem's Innovation Link service to test out new propositions that are not allowed under current rules. And some of this might need more active management by Ofgem to ensure that suppliers and other companies trial and test products that meet the needs of households in vulnerable circumstances or who are on low incomes. And the final area is specialization. Some companies want to participate in the retail market but provide a much more specialized offering. There are some well-established suppliers specializing in offering services like green tariffs or prepayment, while others have focused on market segments such as the private rented sector. Now, we think specialization can offer benefits in providing customers with a more bespoke service that best meets their needs. But it can also mean things like suppliers avoid paying their fair share of some costs. It can leave some groups of consumers with less choice, and it can prevent a level playing field for competition between companies. And there are currently rules in place which require all suppliers to offer to supply all customers that request a contract, supply customers who haven't actively chosen your service under deemed contracts, and offer a range of payment methods and support people in debt. These are core principles within the market which aim to ensure that all customers can access a range of offers. But Ofgem, in our view, appears to have been allowing specialization on a case-by-case basis by effectively exempting some suppliers from these rules. And we know that encouraging innovation and facilitating the net zero transition means that there will need to be more specialization in the market in the future. But in moving to this needs to happen in a transparent way, and the regulator must set out the potential impacts on competition and customer choice and outline what mitigation might be necessary. Change is going to happen, so it's really important that the government and Ofgem take the time to sort of do this work properly. And it needs to happen in the open and with complete transparency over those sort of decisions and the trade-offs being made, because otherwise we might end up repeating the mistakes of the past again and again, because the energy market will always be a political hot potato for the government of the day. So I wanted to end my presentation on a positive note by outlining what we think the future retail market could and should look like for consumers. So Citizens Advice's vision of a future energy market is one that is inclusive by design and recognizes the essential nature of energy supply. It should facilitate and encourage innovation, be accessible by all, and treat everyone fairly, regardless of their circumstances. And that means it needs to be a market that delivers a seamless consumer journey, control for consumers and citizens, a fair way of paying for the energy system, and has consistently high standards of regulation and governance. We developed these principles prior to the pandemic, although we launched this particular piece of work during the earlier days of the pandemic, and they came out of a 2-year research program that we ran between 2018 and 2020 on future energy consumers. And the next phase of the net zero transition will involve asking a lot of people to make changes to the way they use energy in their homes. We're going to be asking households to transition to low carbon heat, and they're going to need to improve the energy efficiency of their homes in a lot of cases. It's a really big ask of people. So another key regulatory challenge that the government is going to need to tackle is how to make this process of making all these changes feel a lot more seamless for people. And there's a lot of challenges around how we fund this and how do we ensure that it benefits everyone regardless of their housing tenure. But the principles in the box on the right of this slide highlight the benefits we'd see from getting this right. They'd benefit people and industry and help drive the innovation we need to help us reach our net zero commitments. And if we want people to take this up, we need to make it easier for people to make these decisions, to be able to change their mind in future and switch to new providers and not lose the sort of services that they've grown to value. And we need to protect them if things don't go to plan. So given the current challenges in the retail market, the job of achieving these principles feels a bit further away than it did 2 years ago, I think, if I'm speaking honestly. But Citizens Advice will keep striving to achieve our vision of a GB market that treats everyone fairly now and into the future. And that's it from me. And then if you are interested in sort of reading any of the reports we've published, I've put the link to the sort of landing page for all our energy policy work, which is just citizensadvice.org.uk/energy policy.
Well, thank you so much, Gillian. I don't know how you managed that wall without just a sip of water or something. You covered a lot of ground there, and I think for many people revealed a lot of the detail that we kind of knew was there, but we almost didn't want to know about, because the socialization of failed costs from businesses, I think, is just quite a horror story. Just out of interest, I wondered whether you believed that there was a strong political pressure on just increasing the number of suppliers almost at any cost at that stage when there was a big growth.
I think there was some pressure. Oh, got that. So yes, I think there probably was some pressure.
Yeah, okay. So evidence, I guess, is what I'm asking, that pressure was brought to bear on Ofgem, or is it within Ofgem's own remit that they made that decision, do you think?
I think it was a bit of both. I think Ofgem's chief executive says today that there was a drive by their board. I'm getting quite a lot of echo.
Oh, sorry, yeah, I'll turn off.
Okay. Yeah, no, Ofgem's chief executive said at the select committee today that sort of they had looked back at the decisions made by their board, which is known as GEMA, and the decision was taken to prioritize increasing competition. And that was a sort of specific view taken by GEMA. I think, there probably was some political pressure at the time. If you think sort of what was going on in the 2010s, we had a number of different market inquiries and probes, a competition inquiry. So yeah, whether or not Ofgem was leaned on specifically, the mood music would have been that getting new entrants into this market was a thing that should be happening.
Thank you. Our usually chatty lot have not been coming up with questions yet. I have asked them to do that in the chat, and we'll give them another few moments. I don't know if we have any questions in the room at the moment. Yeah, so just 1 second.
You're on mute for me.
There.
Okay.
Yeah, and thanks for your presentation. And I'm attending here in person at Oxford Mapping School, and it's very excellent presentation. And I have a question about the price cap. If there is a price cap in either the wholesale market or the retail market, which means there will be lost money for either energy generation company or the suppliers. So is there any compensation from the policy side to compensate the money loss for either the generation company or the retailers or suppliers?
Okay, did you get that?
I think so. Oh, sorry, echoing again. Is there any compensation if there's?
It's a compensation from the policy cost side, I think is what we're saying.
Yeah.
Okay. So the price cap in the last. Oh, sorry. Do you mind meeting again? Just
Yes.
Thanks. So the price cap in the last price cap period, which was, when was it? October to end of March. Yes. Suppliers have been heavily loss-making as a result of it because it hasn't reflected the current costs available. Depending on the extent that suppliers had hedged, some of them will have hedged for the customers that they had estimated would be on that price cap. The challenge that we've had in the last price cap period is sort of suppliers couldn't have predicted how many customers would roll onto the price cap tariff. With it becoming the cheapest tariff in the market. So in the new price cap period from the 1st of April, Ofgem has allowed a further, I think I need to go back and check, but it was around sort of £59 to make up for the fact that suppliers had been loss making in the last period as a result of the sort of price cap not matching what they were required to pay.
Thank you very much. Nick, there's Nick Eyre. Would you want to turn your camera on to ask your question?
Yeah, hi Gillian, thanks for that. It's really interesting to be taken through the story in that way. I guess I want to ask you a pretty fundamental question, as I've been around this sort of market area even longer than you have. And I think back to 1998 and the beginnings of competition. And as I understand what you've just told us, we're now in a market where the vast majority of households, I think you said 22 million, have their prices set by the regulator, effectively. That's about as far from that original vision of competition as you could ever get. And you explained that as being due to people prioritising competition. So we're in a bizarre, I mean, it's sort of Alice in Wonderland, isn't it? You prioritise competition and you don't get it, which I have to say is what some people always thought might happen with trying to liberalise a retail market. Isn't the time come for a much more fundamental review of where competition is helpful and where it isn't, rather than sort of tinkering at the edges and hoping that we'll get back to competition, when it seems to me unlikely that anybody's going to abolish price caps anytime soon, however much they say they are temporary price caps?
Very good points. And yeah, no, it does feel as if we're back to the sort of first half of this century, just in terms of the number of people on price cap tariffs. So yeah, we have gone sort of, I guess, back to the future, or whatever. That's perhaps not right. In terms of, do we need more fundamental reform? So I think there's sort of this phase, and how we get out of this phase can go one of two ways. We continue tinkering around the edges, and we sort of, as Ofgem has done, sort of make changes to the price cap to make it more sustainable. We expect the price cap to move from sort of 6 monthly changes to 3 monthly changes in future, which should mean that the sort of financial risks that suppliers have to bear are lessened slightly. It's very unclear whether or not the switching market will reopen. Very, very unclear. There's the other option of that we do something much more fundamental and sort of, have a rethink about what should a retailer do. I think in my personal view, I think this would be the opportunity to do that. I don't think it'll be the opportunity taken up, I think, just because there are a lot of vested interests. The suppliers that have made it through the sort of the last few months don't want to move to a new model. They'd like to sort of, try and recover some of the losses they've had to ride out through this storm. A lot of them still have ambitions for what they might want to deliver in a sort of more net zero friendly market in terms of delivering new products and services. So yeah, I mean, I think it would be an opportunity. I suspect it won't be the one that's taken up. I quite like, there's a lot of people doing some really interesting thinking in this area about what you could have, but I just suspect that the government won't go for that.
Thank you very much for the question, Nick. I'm just going to check, Ian, has that addressed the points that you were trying to ask as well?
It started.
I was going to let Ian weigh in on energy efficiency. I would normally weigh in on that. I was going to say
it started from the same premise as Nick, which is about Ofgem prioritising competition over pretty well everything else. In fact, you can remember someone saying once that Stephen Littlechild probably insisted on having a choice of breakfast cereals on his thing when that goes way back to offer. Sorry, I've been around even longer than Nick, but essentially I'm concerned that with all the focus on price, both historically where they've been trying to encourage competition and now more latterly, with the current crisis we've got on prices, that this is effectively pushing sustainability and things like energy efficiency and to a lesser degree renewables, because that's covered through the obligation, etc., out the window. And so in effect, again, people are focused on the unit cost rather than the total running cost. I just wondered whether you had any views on that.
Yeah, so I agree that has definitely been the case. And to a large extent, some of that is outside of Ofgem's gift because it sort of regulates certain aspects of the markets. It's less responsible. It kind of oversees government energy efficiency schemes. It doesn't necessarily design it itself. But if you're asking me if the balance is right between sort of focusing on energy efficiency versus focusing on sort of saving money by switching, no, I don't think it is. This country has been crying out for well-funded energy efficiency programs for a long, long time. It's something we've done quite a lot of work on in the past couple of years, where we've sort of tried to look at, how do you learn the lessons from why past energy efficiency schemes failed? And it's all down to the fact that they always tend to be stop-start. There isn't enough money into it. The consumer protections around energy efficiency, low carbon heating markets and stuff like that, microgen, sort of smart home products and tech, they aren't good enough for the next phase that we need to go into, particularly in the 2020s, when, you know, the government ambitions are that we start installing these products and services on a massive scale.
Yeah, that's right. I mean, I think I agree with the point about messaging. And it has always been, of course, you save money by switching, not you save money by using less energy.
Yeah.
I was just going to come in at that point and say, even at World at One today, one of the politicians who is kind of concerned about net zero having cost associated with it, again, used the political mantra about cheap energy. And it's the wrong way around, isn't it? You shouldn't have to spend a lot to be comfortable and to live, but that doesn't necessarily mean that energy is cheap. You might just use less of a scarce resource. And again, the mantra of making energy cheap just seems to be a real disconnect. And that brings me to Martin, because Martin Cohen is asking a question which is about upstream. I've got a sneaky idea while Martin's going to turn on his camera, which is maybe the government should block buy all of the zero marginal cost energy that it can and set a price for that that's much lower than all of this fossil fueled rubbish. But anyway, Martin.
Thanks. Thank you. That was a really, really good presentation. And as you can see from my question, I'm saying that, I mean, these are really, really difficult issues at the moment. But it seems like the fundamental problem is kind of upstream of the retail end in terms of basic energy supply and cost and the government's energy strategy at the moment. Mm-hmm. And as you mentioned, the looming cost of net zero.
Yeah, absolutely. I think, you know, the government has published its net zero strategy, I think, which is great. It's great to see the ambition, but I think there's some quite key gaps, and a key part of that is sort of just how you help households make this transition. Because, you know, what was quite obvious in missing from the strategy was sort of, well, what is the engagement campaign going to look like? When are you going to bring forward, you know, much more details about sort of how you help with how you help people finance the cost of making these changes to their homes? Because, you know, we know that most households can't afford to do this, so we need a much more well-developed set of loans, grants, support for people trying to do this. And again, going back to the consumer protection piece, these markets are not mature enough for the sort of volume of transactions that are the government is hoping is going to flow through them. So the people, the sort of early adopters that are making these changes to their homes right now are experiencing quite a lot of challenges just because the consumer protection regulations aren't up to scratch. Again, we've got quite a nice report on this that we published in October called Protections Puzzle, which just kind of outlines the current gaps in the consumer protection regime and just sort of calls for the government to sort of standardize and strengthen what exists at the moment, because it's got everything from sort of, I think there's about 12 different consumer protection schemes, depending on sort of which aspects. Why have 12? Have one. Make it mandatory.
Yeah, I mean, the people are speculating now that the financial sector, banks and building societies should be looking now at facilitating people adding these costs onto mortgages and so on, which will be, I guess, probably the most painless solution.
No, absolutely, and there is work going on that at the moment, because we sort of fed into various working groups, and we've done some work with banks in particular that are sort of interested in this space.
Okay. Thank you very much.
Thank you, Martin. Just to pick up on a kind of positive point, I want to pass on a question from Tina Fawcett, who is making noise, which is an energy-consuming activity in the background, so she's not going to turn the camera on. But she's looking forward. Are there any emerging companies who might help customers make that move to net zero, and what are they doing that might be interesting and innovative in those three words that you were talking about for the future?
So the answer is yes. I think, unfortunately, we did lose a few of them in the autumn meltdown. You know, there were some companies that, quite frankly, I wasn't sorry to see the back of, but there was ones where I genuinely thought that they were doing interesting things, and it's a shame that we've lost them. So I'm hoping the sort of concepts that they were bringing to the market can be brought back. I think there's going to be an interesting mix of companies in the future. So there's going to be sort of companies that companies like, say, Octopus Energy, where they're taking a big punt on heat pumps, and they want to be selling large volumes of heat pumps in the future, and they're going to have a whole range of smart tariffs that go alongside and work with those heat pumps. So I think there are already some sort of large companies in the market that are thinking about that. I think there's also going to be a lot of interesting small innovators that emerge and will hopefully partner with sort of larger suppliers. Trying to think. Yeah, I mean, Octopus is the one that really stands out at the moment in terms of sort of putting new tariffs into the market, very much to trial and test. They're not making money on it at the moment. They're not making money on any of these smart tariffs, and to be fair, with the recent gas price crisis, those tariffs are rather less attractive than they were a year ago. So yeah, I think the mix will be sort of, what can you deliver that kind of gives people a good customer experience where they can sort of build on new products and services, whether that's something offered directly by the sort of retailer that you're supplied by, or something that just kind of integrates in with what they've already got in their home. So it's why we sort of had the principle that sort of these things need to be interoperable, because that's really key to sort of making this an attractive market for people to dip their toes into.
Thanks very much. I just had to clarify, it's not domestic energy demand, it's actually commercial demand of this hoovering that's going on in the background. What was interesting to me, if you pick on an example with heat pumps or electric vehicles, to me it signals suppliers needing to have some flexibility in their base rather than just meeting the profile of need, because that's forever going to give you problems in the peak. But doing it in a way that doesn't penalise people but allows that control to be something integrated by the supplier. That's the feeling I get anyway. I just did have one other question, which was, not long ago we had a discussion about whether policy costs should actually be brought into gas to help with the transition away from that as a fossil fuel. But now that policy costs are just so huge, as an argument about removing as many pieces of the jigsaw, do you think that's kicked down the road too far, what we can do on gas, picking up some of the policy costs rather than electricity?
Yeah, it's a tricky one, because you can absolutely see the attractiveness of it as a solution, because if we want to sort of kickstart the market for things like heat pumps, shifting existing policy costs from electricity to gas makes sense. I think we're quite worried about the fairness angles of that, because it just has to be done. So if you do it, it has to be done with really well-designed mitigation to ensure that those households who can't make the switch don't get left paying a larger and larger pool of costs. So yeah, we didn't go out with an ask on policy costs in the sort of recent thing, just because we thought if it was going to be done at pace, it would probably be done wrong. And it is something that needs to be worked through really, really carefully, because you get it wrong, you just sort of, you lock in unfairness for the next generation. So, but yeah, I agree, it needs to be looked at, but probably taking it into tax is probably the fairest way.
That's really helpful. And just your simple idea of protecting consumers using a simple instrument rather than trying to have lots of pieces of policy, wallpaper pieces, trying to make a complete picture. So that's really helpful. I think we've exhausted you with our questions in terms of fantastic presentation, setting the scene, showing us way forward. But energy in the public eye is never a happy medium, because it's so complicated to explain all the details that lie underneath, making it fair, just and appropriate for the future. So thank you very much indeed for that, Gillian. Quick advert for the next talk, if that's all right. Thanks. So we don't have a talk next week, but the next seminar will re-examine the opportunity for sustainable biomass in Europe, and I know that's quite a topic of debate, and Calliope Panutsu from Imperial College will be coming here, will be joining us online to discuss that on Tuesday the 22nd of February. Please again sign up to the newsletter if you haven't done already, and look out quite soon for details of our Oxford Energy Day coming up on the 23rd of March. Gillian, you'd be welcome to join us if you were able to take time out. So thank you all very much this evening. Thanks again to Gillian, that was fantastic, and have a good evening, everyone.